Hello everyone. I want to do a look back for the stock portfolio that I created back in time a couple months ago. Probably, I believe this was created in September when the portfolio was advised, you know, what to what to buy. So as the column you can see if you record this video or probably an email. I don't think I ever created a video on this one. On the column for the stock that on the suggest buying price at that time the recent ranges and the target. And what I do is I add a column of what's the price of November 15th, which is a week ago, and what's the return if we have bought it in the suggest buying price. Some of these prices also go in detail whether you actually would be able to get it or actually bought it at what price for this particular stock. Because some of them actually, in reality, even I put a prices which is lower than the ranges in always trying to advise you to get it at discount, but really the stock never hit that price, you wouldn't be able to buy it. So we will start the first one. So what the color represent as well is the red mean he actually didn't hit the way I expected. You know, if I look at a lot of stock and analyzing it, and not every single one of right, make money. I mean, even Warren Buffett doesn't really hit every one of them in the portfolio necessary given the return he would like to have. I mean, he's using best analysis and tools and what he has to determine the course of action, but sometimes not necessarily right, but it's still part of the portfolio. And a lot of times there's a rationale and discuss what need to be go into it and why determined to buy what is advised to do so. In this case, he bought it and changed his portfolio. Like he dumped Apple stock and he bought a Japanese foreign exchange company. He bought gold, Barrick Gold, and he sold the marathon oil, and he sold airlines. I mean, all this stuff you can see. He struggled through his portfolio, and over time, actually, he will get the return he expected. Which, if people understand his past performance with 20% year by year, and so does the Solomon can do that as well in his private equity company. So I'm trying to start tracking this to give you some confidence about my investment and what I have advised, so that you can follow through and also make a decent return, which what we really when we determine decent is outperform the market. So the first one, AMC, if you recall that the stock was really high around, really used to trading about over $10, and at one point really a few years ago it was really high, but because of pandemic it was dropping really significantly very low, and at one point I think the lowest was about $3. So I was advising to buy around $4 at the time that the stock is still around $5 I believe, but then of course it actually went down much lower than that, like 230 230 I think was the lowest one in this case for the last month or so. So my suggest price is $4, and today, if you look at compared to the price of 15, you actually was still operating at a loss in 39%, and the stock continued to rebound because of the news of vaccine. So you actually, if we compare the last Friday price on November 20th, it was only 5% negative, which I still don't like it to be negative. But if you look at the 23rd, which is just closing it yesterday, Monday, well, actually today, Monday, well, the return will actually, now you get even less than 5% because you're hitting like $3.83 when the market closed. So ultimately, eventually, I think this stock will hit higher than $5, and at the target of 2 years target of $12, I still think this is going to be true, especially now you have a couple of companies that vaccine is available. But this one I would consider as where I didn't really predict it as well as I think. And then the next one, AMD, it was around $74, which you probably would have be able to buy it at a time I really recommend it, and maybe at really $76, maybe a little higher. And Currently, at the price of November 15 was $83, and 20 was around 84, and then 23rd, which is this today, was even higher. So this one already giving you, again, it's about just a month or so ago, um, and this already give you about 15% return. And really, if you compare the peers on the semiconductor, in this case, TMS, which actually providing the chips to Apple phone, Qualcomm was actually giving you a bigger return than 13%, because you know TMS TSM not TMS TSM for some reason were actually hitting 90 plus, and you were actually one point these two stock was very close to each other, or running around $80 few months ago if you look at back. And Qualcomm always make a killer and have been really hitting high and over $100. Next one, Apple. Apple again is as well. It's a little bit disappointing. So if you will have, but bear in mind because of the split. So without the split, it was really 400 plus, and it really turned up as high as 500 plus before the split at one time, which is only, if you remember, around August timeline. So the stock haven't been performing well that well, but then analysts will still believe that it was about $140, $150. Some analysts, I still think that will happen, despite iPhone 12 in China didn't really sell as well as expected, and maybe in US is too early to conclude that. You see, if the Black Friday, probably no discount, so people wouldn't really really buying Apple phone during Black Friday, but mostly Christmas. We'll see if Christmas will have a quick sales and fourth quarter earnings and will spike up the price. If not, I mean, the chances is going down. And recently, this stock actually, it wasn't doing that well. I mean, if you have bought 110 as I suggested, you are still making some return, at about 7%, 118. But I think currently it was about $120 when the after the election, but then right now it's kind of, if you look at today's price on 23rd closing, is only trading about 115-ish. So this stock, to be honest, I mean, I kind of recommend that if it's around the range, you should have dumped it and probably buy back again at below 110. And the reason I'm saying this is, you can observe the FAANG stock behavior. While the market is so bullish right now, the Dow and Nasdaq and the S&P 500, it went up so much because of the great news of vaccine. These stocks actually have been really challenging. The stay-at-home stock that were benefiting from stay-at-home actually was giving up a lot of return, like 20%. So I'm not gonna get into it because I don't recommend buying Zoom in my case. But if you look at Zoom, Adobe, now they all actually have gone down quite a bit. And then the next one, bowling. This one was really a home run green. If you were getting $150 the way when I'm proposing around the price range, you would be able to get around 150 because it was hidden in one point, or 155, which is still in the range close enough. I mean, I don't think these prices, to be honest, you really will lock into exactly that price. You will see the movement that believe my target price. You may have to adjust a little bit higher, 5% more to get it. Definitely not more than 10%, okay? Because I already discounted this a little bit lower than 10 to 15% for you to ask you to buy the stock to begin with the range. So you may have got 155, and if you have hold it, because bowling didn't really have any movements for a month and so until recently when the vaccine come up. Well, not so much about the vaccine, but really the bowling Max 737 have actually gone through the authority, go through the check and an inspection, and were okay, give it okay to go. So then the stock was actually gone up significantly way after that. And this one I missed it too. I posted here because there's no movement for a month or so. I did not buy it, and instead I personally have a limited amount of cash. I cannot buy all this stock I recommended to you. I may only at some point sell it already, or I would like to get it and never did and planning to do so at some point because this one didn't move so much. So I actually bought it one point, sell it, and I don't own it at the time that the spike had happened. But if you have money, which you will have hold it because as the way I recommend it, you actually will have a pretty decent return because you can see on the 20 where you spent 199 was 41% return and the price about 150. Actually, you know, the price was actually hitting $220 at one point, and I think in 23rd, which is today, it closed over $200 as well. That's why Dow Jones Industrial Average was hitting very high. So this stock, I wouldn't recommend you buy now. It's over $200, okay? Because they actually fundamentally didn't do anything. They were behind their orders. They have a lot of contract issue. But ultimately, this stock, it makes sense to be about 150 or $200 because if you look at a few years ago, it was probably 400 some dollars. This stock, if you were owned 3 years ago, unfortunately, you wouldn't really make any return. Like the return would be less than 3% for holding it for 3 or 4 years because bowling just did a very terribly because of the plane crash and some liability issues. So the stock had gone down very significant. Then you kind of come back a little bit, but then pandemic and totally crash and you really made the stock this year as low as $90 and I bought it, I sold it at 150, 160 at one point. It was jet up $200 for rebounding and they hit it back to 150 level, which is where it was at the point that was actually good to buy. And then the next one, this one, you still have opportunity potential if you haven't bought it yet. Even though the price has already gone up on Monday, if you look at it, because I have previous video, I've explained to you that this stock we're trying to reissue additional shares at $68 and you have a period of do so and you already passed the period, then I know the stock gonna be ramp up again. So BIGC, I was recommended $75 to buy this. This 78 is slightly higher, and actually the stock keep drop even lower than that to 60-ish. So regardless, on 15, if you have a look at it, at the time I recommended was $83. You still have a percentage of 7% return. But if you look at 20, which is a buying point really, $68, you actually have a loss compared to, you $78 if you have bought that. But on Monday, which is today closing, it was actually after market already hit at $77. So this stock, again, the higher, if you go back to look at the history, was $141. You have few spike during this stock went in IPO around August. It has spiked few times. So I think after this, with the momentum, it will push it back very quickly to $80 level or perhaps even to $100 level if there's enough momentum. Okay. So this stock, again, if you would have bought Sophie versus this, I highly recommend getting this stock instead of Sophie. Of course, the size is different and revenue is different and the balance sheet, is different. But bear in mind, this stock is only less than $100 versus Sophie was 10 times more expensive. I think Sophie right now, as of Monday, very close to $1,000. And then next one, DT. This one wasn't doing that well, so I put yellow as amber. If you were bought at 38 today, I think you still actually have a loss because it runs 36-ish. This stock had one point really did drop it to $33. So if you have a buyer at $33 and mix it with 38 and diluted it, you're at around break even point. But I still think this stock, if you have dropped back down to 32, good to buy. But I don't think the potential, will be $50 will take quite a while to get there. This is the company that doing cloud computing business supporting to AWS, and AWS is providing to Google, I believe. So again, I wouldn't buy Google or Amazon because it's so big. But if you buy the supply for them, which is what supporting their operation business where they really make the revenue, I think actually pretty better off, right? So the next one, Google. At the time, this one is a home run. If you would have bought it at the time and advised you to do so, probably not 1288, but maybe 1300. Um, then you would have make a very decent return, more than 30%. And their target, I think they just got upgraded of the target lately from some rating agency. Now, the time last time I looked at it yesterday was 1800 now. So again, I think they are very close to 1800 at this point, and Poplar will break it through with the momentum higher than that. For some reason, the antitrust didn't really disrupt them much, and only help them out to, for some reason, that actually pushes stronger. And one of the other stock you can consider on the flip side of this, in China, they're using a stock called BIDU, Baidu. Baidu is the same as Google. You have an AI built in. Is an engine that's trying to searching stuff for the people in China, and you actually like you can search for music or wherever. You can obviously multiple language, English and Chinese, and it was actually very awesome. And the stock didn't really evaluate as high, and then Baidu got hit recently because they bought out a company called YY Joy. So they normally sometimes the target company price gone up, but not the acquiring company. So the company that buying out the other company. So I think Baidu in the long run would be good to consider $136 right now. The next one, H. Well, apparently with the vaccine news come up, then all this restaurant and also hotel industry were kind of really recovery, or actually really get a spike going up really very well. So if you were getting about $50, which actually it was at $50 at one point around this stock, you will be able to buy it. And then you will currently it's about $69. So you actually make a 40% return, which is very very nice. And actually this stock will go really even higher with the momentum we've seen in next year, when you really got to the operational recovery. Eventually this stock will probably hit no problem about hitting $90, which is back to where you was in the old days. And JD, this one and the other video, if you're listening, I did recommend buying JD out of the top 5 stock I picked. Well, probably before the top 5 stock I picked, doing that I did a mini video to kind of tell people what to buy. And JD, PDD, Baba was on the list, right? We're on the list, and then the PME is another stock. So this JD, you got it around the time $70, which you would have bought it that price, because I did get that JD for $70. You will have made probably after November 11, I advise to sell them out, and so you'll be around $92. The highest you may not get in there, maybe 88. So this return, which is giving 25%, is reasonable. You probably will earn, if you have bought a stock at 70-ish, selling around 80-ish to $92 range, which is around here, you will make about a return of 25 to 30%. Okay, which is why it's in green. This one again is very good return. Consider the market maybe about 15% return in the index overall within the range of time in the last 2 to 3 months average. On the JP Morgan one, $85 may be a little challenging to buy, but you could have get around 86, 87, I believe. It did hit around that low at one point. So the stock actually did come back for some reason and really rebounded very strong. So it came back to $115 on the 20. You will get like 39% return. If you sold already around over $100, 15 over 85 is still you get about 18% return. So this stock again is really a quick pick. And target wise, $150 is still realistic, I believe. Then next one, MGM, again same reason, with vaccine came with those two great news coming on with Pfizer and as well and Moderna. The stock have been, trading around 20, 20, 50, 21. You will get it, and now it's at $26. I think the stock maybe keep going up, and and so you would the return is very very nicely 25% return again. This one is a little bit bad, so you wouldn't make any money and potential slight losses like 2 or 3% negative. Doesn't so I put it in amber because I believe this one MITA, to be honest, now around 1190 is a really good price to buy. And you really, if you look at the price range of the history of this stock, and this stock is doing artificial AI, facial recognition, and a lot of bank already have contract with them and doing things with them. So this one probably will hit $14, not a problem. You may take a little time, but you'll get there. $20 probably will, I would say, very honestly, will be next year. This, this is where the number gonna coming from. So if you buy now, you may have to hold this one a little longer for $20. But if for $14, if the momentum hit, you could very well that by end of November, which is end of next week, we'll see that number. But we will revisit it. I will kind of keep this thing up, on every month or so to do a review again. So you have a good idea of if you have to stop at the point, and because of the tiger prices office and still higher on a lot of them than where they are right now at this moment on 23rd, you don't necessarily have sold them, you probably have still keeping them. So the percentage will give you a really good idea of that. And then Microsoft, you don't make a lot of money because you bought a 200 today. At one point it was 222, but now around 210, so it's only 5% return. That's why I put it amber. It wasn't, and in fact, the price actually dropped, just like the story I told you about FAANG with vaccine came and all this stuff. You did go up a little bit, then you kind of dropping on the between the week of 15 to 20, because there's a lot of money push shifting from FAANG to other buckets like the green energy. So eventually you will probably go back up with the momentum of with so much cash on the side if there's no bad news to drive the market down, but it may take a while. And this Microsoft actual when year for this year high was $230. So there's still some room to grow for this one. But again, they probably get hit because of the Teams. Teams is the software that actually help out to work from home, could conduct business at home. So I used to use Team in my old company. I think it was pretty good. But again, if people gonna go back to work, then some company may change. They may not need Teams, or they don't use it, or they use the free one instead, right? So they see the revenue maybe going down, but at the same time, the Xbox is gonna come out a new one when Christmas. So maybe if the sales were doing great, then they will increase revenue well, and you report on fourth quarter, it looks good, right? So next one, NCLH. This one, another good one. If you bought it about $15, and right now for whatever odd reason with vaccine, which they didn't do anything, the cruise didn't really happen, selling yet. As my understanding, they for some reason the news was really helping them out because again the market was six months ahead of the curve, so is priced in with vaccine gonna be making the business continue operational, I guess. So they actually hit $20. So you will have 15, you buy it 20, you got a very nice $5 return. That's 20 some percent return. So, and then the next one, MVDA. This one is the reason why I put amber because the price of 15 versus 20 was actually going down, but it's still a very nice return because if you were bought around 40, 20 or a little higher, as the way I suggested, it's definitely still within 400 plus range. The stock at one point, have definitely my year target of 500 because I think this stock I would overpriced once it hit 500. But regardless, the reality is that at 15 it was $563. Even now, I mean, you did deep down to below 500 at one point over last week, but then you bounce back again over 500 again. So currently they are around 520, 536 if I remember correctly today. So your return is still very nice. If you bought at about 430, went up 530, you make $100. So that's about 20% return. Okay. Again, because these numbers are very sensitive because of depend on what point of time you buy and how long you hold and whether you sell it before you hit the target. And I'm putting the comparison as of the date, on either yesterday, well, 15 or 20, which is last Friday, or I even know the price of, what it looks like today when the market close reaction was for the green one, the actual meaning is all higher than the 20th or the previous 15 when we're looking at the price. This one, PDD, again, it was on my recommendation list. You may not, let's say, get a $68 because at the time I tell people and doing the video, I think it's way after this $68 because I'm more like the video at the time was a reminder for people who didn't buy it. And I say there's still a chance before November 11 you make a good money on it. So you really would have gotten about 70. I bought it. I didn't get 68 actually that low. I myself bought it at 72, which is pretty. The range was 70 to 95, so it's pretty good and low end. So again, remember these prices are set it up here. You have to be flexible enough yourself to adjust it a little bit in order to buy them sometimes because you can't be just wishing about this low dollars because the market fluctuate and changes so volatile and so quickly, right? So at the snapshot I provided it versus tomorrow, you have new information coming in, so you have to kind of think about it yourself on making minor adjustment. So we have got $72. This one actually literally after November 11, it had hit it at $143. So this one is a home run because this one is a double. You actually, even if you sell 111, still over 50% return on the 15 if you did. Otherwise, you will hold it longer. You'll actually make a 100% return. And I wouldn't really recommend you to buy it at 140 some dollars now. It's too high, even though there's a December 12th, which is another another prime day of selling online, which discount. But I think November 11th one is a stronger and normally in historically more dollars of sales revenue than the December 12th. So and you only jump up that much. So I don't recommend people buying it unless this drop at $100. Then you may think there's still a push through on the December 12th sales. And definitely fourth quarter, I would think PDD will have a very strong earnings for this coming quarter. And the LVGO, this one you bought it 110, you will make pretty good money. This one I buy out is a merger with Tally.dot, so I don't really know what the deal with the merger is, how much money you're getting for merging it. But definitely, it's still a gain. You actually would have got it about 115. I don't think you get 110. I don't think you ever hit that low around the range of time. I didn't buy this one because again, my money was focused on something else. So, and then this one TEL, I did get it at $70 at the time. You would have got it if you got the when I recommended it. You go in and really buy that in your portfolio. You did gone up to $100. This one is an AI company, and it was actually giving you a very nice return if you get 70. And then now is 107 and actually even higher than that, I think. So you get a 55% return on that one, which is another home one. I didn't call it that one because on the 15 was only $100. So comparatively speaking, between 15 and 23rd, 20th, or even 23rd, the stock didn't change that much anymore. But still, 100 to 106 really 6% return. But these days, my friends start to make a joke with me when I told them to buy a stock, and I told them buy this, you'll get 10% in a week. They say only 10% because, as you know, the market have been crazy with the green energy stock, with the electric vehicle, and with biotech stock. I mean, their return was a lot more than 10% in a week, right? In a few days. So people start to think 10% is crazy. You're not even talking about business. So I need to make sure that you guys need to think as an investor the market is crazy right now. This is very phenomenon exceptions. Normally, typically, you go and look at the index, look at Dow Jones Industrial Average, S&P, and Nasdaq. You give you about 12% return for 1 year, one full year. Now we're talking about only 1 week. In this case, XPEV, when I talk about it, is 2 days. And the next one, trip. If you have got it around probably 16, you never get it. It's probably 7. You will get the low end 17.50 or even $18 in this case for trip in order to buy around the range. Because $16 was very like way back a few months ago. And then I didn't monitor. I didn't buy this one because I was so focused on my XPEV. So I totally forget about this one. I should have bought it back in $19, and now it's at $26. So for those of you who hold and bought the trip at the point in may not necessarily that price or close to that price in my recommendation list, you will have about making 25% return here, 27% because it's 16 to 20. But really, if you buy 18 and now today $25, you do get 25+%. That's why it's in green. This one is another one, give you a very good return. The next one, TSM, which is what I previously already talked about in AMD. Those are semiconductor stock. And when I provide recommendation in the presentations with my friends, I basically tell them that you either buy AMD or you buy TSM. I don't see why you want to buy both. If you buy both, then my methodology will be you want to do $1,000, split it 500, 500, move on, right? Both of them in the same industry. Maybe they move up a little bit different rate. At one point, they were kind of I guess they're raising each other. So TSM and AMD at one point, if you go and chart it, they all around 70 range and they have been all around 80 range together. But now you can see the result very differently that TSM have actually definitely have gone up a much stronger. When they didn't dip it 70-ish that low as AMD, it was around 80-ish if you track them. So if you bought an 80-ish because you may have missed out this presentation a couple months ago, I have given and still say it's a good stop, you will still make pretty nice money because you bought it around 82, for example. It's still at 95 now, I think at one point with $98. So this will give you at least 20% return again. So this stock again is a very good semiconductor stock. It's not as expensive Qualcomm, which is over $100. It's not expensive. Another semiconductor stock somebody told me, I think when I look it up, NVDIA, yes, which is $500 plus. So it give you a little money you can still buy and invest. Airline, I'm a little bit disappointing. That's why I put in wet. At the time I bought it, you may get it $30 or $33. Actually, 30 is a little low end. So you may have, I told my friends, so they probably would have gotten in about 33. At one point, it did go up to 36, so you will have make money. And today, with vaccine came out, with the good announcement and so on, they are standing around the range of $40. I really think next year, when the recovery happen, I think at Thanksgiving will be more travel and so on will hit 45. Unfortunately, as you know, the coronavirus, surging, the number of cases are surging, and a lot of advisory or travel restriction and really tell people not to visit their friends and relatives. So your chances are you won't hit $45. You have to wait till next year. For those of you who own the United Airlines, I sold it actually around 36. So I didn't make much money because I know the first way I bought it and make money, then I buy, sell and buy it again. The second wave, I actually have a loss because wait till the vaccine news come out and hit it to $40, sold around. Because at the time the market started to sleep, I was a little worried about the correction. Things didn't look as quick at the moment, so I advise people even sell it at a little minor loss. Well, because if you hold it, you will hold it till next year. That's too long. I remember I'm preaching opportunity cost, which is different than other fund manager, which will tell you buy this stock and hold it forever, right? So I take the time of the opportunity cost, and in this case, this stock didn't work that well in terms of opportunity cost because I took the loss and went again and kind of wash and didn't do much. But if you had bought around 30-ish and let it sit still, Right now at the moment you will have a pretty decent return, like 15 to 20%. So sometimes it's just a matter of opinion, how well how well you look at the timing, right? So timing, opportunity cost, a very important lesson. SUM next. This one, if you get 15.50 or even $16, you still make pretty good return. I want to buy it back. I sold it already. So this one I actually bought it for $14 way early before I did the recommendation to you guys. But I sold it around $17. 16, I think 16ish. So I make money, but really hardly anything. But if you have hold it for long, this one, then you will actually make about 10%, which is not that much, right? And then now the markets keep going up with the SUM, and I really think it will hit over $20 with no problem on this one. So you will probably give you 25% return if you still own it and bought it around $16. So this one I didn't put it green. I said I think it's okay. You should still have make money on this one, but the return not as nice as you would like to or expected. The next one, Nike. Realistically, you will never be able to buy $100 because when I propaganda that to buy it, you never hit, you never go by $100. I think it was sticking around $110, $115, or $120 at the time. I was advising anybody to buy, so chances are nobody got this stock. So, but in the case if you got it, you probably will get it $120. So not 100, and now it's $135 as of yesterday, today 23rd. So you still get 35% return, right? Because well, not 120, I take that back. 100, 113, 10% return, 10 or 12, which is at this moment you may consider thinking this stock is not performing that well. But honestly, 12% compared to the indexes on 2 weeks timeline or so, you may be still okay, right? I mean, I think it's still performing as expected, but right now I think people will start to get greedy as the market gone up so much with so many crazy stock going up, double, tripling. So my next assignment is to find those stock and hopefully we'll share with you maybe by end of this week because I need some time to go through and analyzing. I don't want to give up stock that you buy tomorrow. If the momentum lasts, yes, you make few bucks of it, but hey, if let's say touch wood, right? If there are so many COVID cases after Thanksgiving and some senator gets sick and policymaker gets sick and you really get worse and shut down, well, the market may really, since it was so high, you will get a correction. You have a good excuse to drop the market. Well, then instead of making money, you'll be losing money. So I have to be very cautious about my analysis. And what I do on my analysis, which take a super long time, is really I do the fundamental. I look at the technical and also look at the macroeconomic factors and also the news associated with the stock. These are all the stuff combined together to determine, and also the price range of history to determine whether, what to buy and around what price, what I think is going to happen, and how much percent of return you can get, which is actually a little bit more specific than anybody else you have heard probably in the past of other fund manager or analysts will tell you, right? Because I think they are very high level, tell you just start this and this is good to buy. They never tell you what price to buy. They never tell you where the target price is and the timeline that will hit the target price, right? So I'm a little different from that perspective because I'm the individual investor like you, really want to know if I buy this stock, what is my expectation? How long will I get the return? What is the risk associated with this, decision? Okay, next. This one is an ETF. It actually did pretty well because of the IPO. As you know, there's a lot of IPO this year. Yeah, it's the highest of the American history of the stock market. So they actually did very well. And ETF, because they mix, so some go up, some go down, and average it out. So that's why the return is not seen it as great as you think because they, in a sense, they're hatching a little bit better. If let's say the index didn't do that well, the IPO will losing money and didn't go up the price but go lower. Then after you issue the IPO a week later, whatever, I mean, then you average it out, you still work out well, it's still positive. So in this case, if you have bought at the way I recommended $49 or $50, you will get close to 20% return today. Because this one I've been tracking it. I bought it, and when I bought it, the stock was around 49. I did buy it around 49, and it was going to $51. It got stuck. It didn't do much. And then you wait a little bit, you calm down, you go back at $53, you get stuck. And now I think the next level is $57, you get stuck. So you could put, I mean, as I targeting $60, it could be probably if the market continue the momentum, the index keep going up, it would be very well, especially Airbnb will be issue an IPO. We don't know when. Roblox will potentially on IPO, and a couple other really solid. To me, it's a very solid company that if you go IPO, the stock will go up. And if you mix it with that, which again, I don't know what stock make up to this IPO ETF because I'm not the fund manager of this IPO. But regardless, I think the portfolio. This lady, I know is she who managing it did very well and very conservative when she was on the on the media and presenting her stuff. The return were actually higher than what she told the public, and so 20%. I will more likely say you will land at the end of the year if the market continue to go up the way it is. 25% on this stock probably will be where you land at the end of the year. So there's enough 5% growth potentially, in this ETF you buy. The other one is not ETF, but Warren Buffett stock, baby. This one have been performing very strong for whatever odd reason. So 175, 185 dollars, and basically below $200. Just like Goldman Sachs. Goldman Sachs has have a portfolio ETF as well. If below $200, bang bang, you should buy it at that price. You may have to wait, but you don't have to manage. You can just sit still and relax, let them do it for you. You probably will go by 220 very easily. I mean, right now, obviously both of them are above 200. So in this case, it's $227. So you see the returns about 20, which is but in this case, Warren Buffett beat the IPO. If you look at the percent, but at one point it wasn't. So it's an evergreen journey, right? Until you realize it. Even you realize it took the profit of the money. I mean, this ETF still go on. So, so you could have go up and down, but again, I still think 185 is a golden number. If next time this market for some odd reason goes south and come down, coming off from 230, definitely consider buying it around 185. The next one, real estate one, I have no idea what happened. Everybody say real estate is wonderful. Housing sales is great. Existing sales is great. Building houses highest ever in American history. Because of the millennium, they still have 5 million houses need to be built or something for this year to next year. But unfortunately, this real estate, I don't know why this ETF so bad. Well, the good news is at least it's still positive, like 6 to 10% return. So give you the idea of this one is, if the real estate goes south next year, then probably this is not a good ETF. Real estate you want to buy. I may have to find a different symbol, but because again, bear in mind, even IPO, it have more than this symbol IPO ETF. There more than one. This one real estate, there's more than one real estate ETF. Well, this is just what I heard from Yahoo Finance Live. I did a little analysis. I think that was, it was good, so I put it up there. I mean, you still give you positive return. Don't get me wrong, which is important. At least not at a loss, right? So, and this is really the list I have really recommended. Back to I think it's September timeline is where I recommended, late August September timeline, and then obviously again, these are the one that I showed last time, and nobody can buy all these, right? So I just want to really give a quick highlight. So you really would possibly go to top 5, right? 1, 2, 3, 4, 5. This top 5. Okay. So what it did is BIGC is moving. Like I said, still an opportunity to buy. Okay, this one after issuing of the IPO, you can see from 68 today moved to 77, 11% today, just one day. And I think it will go up further. XPEV, this one is already crazily, ridiculously. If you have bought it, I mean, this is later, so I would say buy it below 31 at that time. But you, because you really have to literally buy it around that price when I introduced in the 20 some dollars no longer exist at that point. Um, and really, I mean, it is the latest price of this after hour today on 23rd is $77. So regardless, if you buy it really at 30 plus instead of 22, because you're not the first way person buying it, but you missed the opportunity, buy the second opportunity when I said it again, you will still make 100% return on this one, right? The next one, BLNK. Well, this one I need to say sorry to you guys, so people need to reach out to me, that's the reason. This stock, I set up 8 to 850. You never make it that price. Or maybe I say you did make it, but probably nobody paid attention to it. I didn't tell my friend to look at it. I was so busy with XPTV. So this one actually got missed. And then the next time you seen it, it was hit 12. Well, at $12, I think it will slip back a little bit. So I told my friend, don't buy it. Well, then guess what? Next day, $14. $14 and $15 range, because remember the intradays can go up and down by volatility. So I told my friend $14.50, go set it up. Guess what? This stock is off today closing market $33. So 100% return from one. So TACO haven't moved much, but you definitely cannot buy it at below $7, unfortunately. So you probably will have get it now, because with the market momentum, I truly believe because of momentum, you want to take advantage of the momentum. Because this, like I said, I was doing it based on volatility technical analysis. You will probably want to buy it at $8.56. I think right now it's still around $8.56. You want to sell at $11 and don't look at it again, okay? If you're going up at $20 next year, too bad. But you know, I would say you buy 850, 11, 250 is your profit, still very good. Well, again, today is 23rd. Well, if tomorrow you're 24, you don't buy it, it's gone up already. Too late, then too bad, right? I have to pick another one for you. This one SUM we talked about, so I'm not going to detail that. The way of return is a little less. Well, gas is already gone way high, so you can't do it. Salesforce at one point was really around 235. You have got it, but you missed a chance. No, too bad. Now 260. Well, they were 276 high. They may flip it again or go another way to 276, so you can buy it. UPS, you still have you never hit 155, but you still have a chance at 160-ish. I think you can make it 165. Maybe this year we'll get $200. I don't know. I can't tell you, but because the delivery is supposed to be only two major carrier, UPS and FedEx, right? FedEx is too expensive, so I say go ahead UPS. But the margin, actually saying they're not doing that well in last quarter when I was earning, because they said while the volume is expanding, they're driving further and further apart to deliver parcel with the same price because they were planning to increase price. Then they got pushed back because they were worried about nobody gonna use them. So then their margin actually from that perspective a little more slimmer. But if they have a high volume, they're still covering it. So the profit dollar wise will still be great, right? This one I want to highlight it. Third quarter they were blowing out estimate and EPS all met. Well, they give a cautionary statement because this one, for whatever reason, they classify themselves as a work from home benefit stock, which I don't understand that. I have totally no idea. I can't see the contract. I don't know what they do, but I know when I look for a job, that 3 or 4 companies want to convert over to Workday. They ask if I have that experience in project management. And so the spec line. So this stock right now at 207, I would say between 200 205 205, buy it, hit it 220, you want to sell it, sell it. You make a quick 10% return, quick 10% return. If you want to hold off to it, I still believe this stock should hit $300. They really have a lot of revenue, although I don't know the contracts, how they make it up. I'm not the one write their contracts, but a lot of company, whether small, mid, and large company, they use Workday. And they do have a lot of functionality, which really nice what I like about. MITK talk about not too good. Nike, I don't think you can get 110. I mean, they stay 130 something. Maybe it gone down $10 because the market is so bullish right now, right? So Gap, well, way too high, $25 now. So this is not gonna be something you can get, but at the time, if somebody follow this whole list and look it and pick it, they may have got it. They will make a 20% return, right? Apple, I would say wait. There's a chance to hit 105. You may get it when you hit there. NOW, well, you never hit 380, but Zoom did. So this is similar to Zoom. Could have gotten it. You could have made some money. Okay. Then for some odd reason, I don't know why this one I make it so low. This one is crazy. If you would have bought it at the time, I advise you on this, which only 2 weeks ago, I think that was my video. I need to look at the exact date. Probably you would have got it $5.50 or $6. You may have to pay a little premium, $6 though. This stock at $16 right now, 300% return. This is another one. I wish I put this one on the top so people would buy it and benefit from it. But because of the size of this company, their size, their revenue, their trading volume, I really didn't put it at the top of the list, but still part of my list, right? So I don't know if anybody really buy that one. But for people who like the small automobile, maybe they did. And then this one is also ridiculously gone up quite a bit too. So you can check it out. I think it's at $55 now, which is crazy. This is a China stock, which I actually don't know what they do, but I read the recommendation. It sounds good, So I put it on the list. That's why it's also at the bottom of my list. TPL is crazy right now too. It's gone up. NIO was my list. It was crazy, but I don't think you actually could have gotten it 25, 30. At the time I recommended, you never hit that level. You actually, if you have a buy this one, you have bought it around 35, which is today at 55 as of end of today. So it's still $20 margin if you will have got it. Adobe, I'm not so sure about it. GameStop, you will have make 30% return already. If you would have bought it around, it did hit close to 10. You never go below 10, and now it's $13. So 10.50 you get it. 13.50, $33. That's close to 30%. Okay, this one didn't do as well, like I said. And then this one actually too bad. This one you will make a lot of money too, but I don't think you ever hit to 330. Well, what happened is they lay off a whole bunch of people, restructuring. Hong Kong government decided to give them money, bail them out. So this stock was gone up crazy, like suddenly 25% or more. So I don't think you have get that stock anyway. Zoom was on my list. So you would have bought it 380. I think you gone back up to 420. That's a lot. That's 10% return, right? This one is no good. SWBI didn't do much. And the aerospace, this one I think you have gone up to. This one I think is really good. I need to go check it. This one gone up too. I'm not go through the bowling was actually another home run, right? But I'm not so sure who will really go down my list and then pick it from there. Twitter didn't do much, but still gone up. And PLL, this one another one. Right now it's at $26. If you hit below 25, I said below 20, I don't think we're ever there. Buy this one, it will go up to $40. Okay, this is a lithium, which have a contract with Tesla. Okay, so there's still 3 stock out of this whole list. If you listen carefully, that may worth to look into and buy. And definitely BIGC is still the top one that should be go for it. Okay, if you like my video, please subscribe if not done so. I hope you enjoy my explanation of what for all this stock, and thank you for your patience. I try to speak as quickly as possible, give you as much information as possible, giving you the rationale, the best and easiest and shortest as possible, because I gone through some of the other people video, make me suffer for an hour. I still didn't figure what the heck, right? And give me too much information that I don't care. So I hope this really very summarized. I am looking for feedback on anything I can improve and help you to invest. And if you have any questions, make sure just send me an email or let me know. Again, hope you enjoy my presentation. Let's hope you make a lot of money in this market right now, taking advantage of it. Okay? Have a nice day.